Tilray is a Canadian company, so it's a Canadian LP, and technically, it's not a multi-state operator. It's actually it's a company that has I think a significant U.S. footprint. Their footprint in the U.S. is as much around exposure. They have the spirits industry, so liquor, beer, and then even some distribution, some CBD, and they have a major. They're the largest player in Europe, especially on the distribution side. It's important to know that Tilray is also one of these companies that I think was one of the early Canadian companies that had this extraordinary market response because it was traded on the NASDAQ and it got follow through, and it was and really we never owned Tilray for the first year and a half of this fund. In fact, we didn't even own Tilray until they merged with another Canadian company called Afria that we thought was the best operator and the most profitable operator in Canada. And so that's when we began to not only did we have a Tilray position as a result of that merger, but then we started to add. Tilray has also made a kind of an optionality, the optionality around investing in the U.S. So they bought some of the MedMen assets, which was a big operator in the U.S. And I think upon federal legalization, they're positioned to exercise that option. So I think they're very well positioned. I think of them as really one of the few big global cannabis companies that really, Irwin Simon is the CEO. He's got a background in CPG. He's got a background in consumer products. And I think there was a lot of criticism about the exposure that they took in the U.S. To buy, a distillery and to buy a couple of beer companies. They own Sweetwater. They own Montauk Brewers. These are like really popular craft brews, but they're not cannabis companies. And people said, well, hey, are you trying to like put the wool over on us and say this is, like we're in the U.S. See, no, I think it was a thought about we wanted to bolt on cash flow generative businesses. I think there's a view at some point that the beverage segment within cannabis, so THC beverages, will be a very big segment. I think it will be. So I think these are really smart moves. I mean, Tilray's had some of the same problems as all the other companies. They've burned through a lot of cash. The market in Canada is very limited. And just back to what people will see when they log in to look at the constituents of CNBS. I say this about any ETF. Look under the hood. See what the ETF actually owns. I mean, that's whether you're owning a tech ETF or a home builders ETF. I mean, the largest position in the home builders ETF is not a home builder. So something that people will also see. I just want to clarify this too, because if you look in many places, and I think whether it's on a Bloomberg or even on a Reuters or maybe even on the CNBC site, not CNBS, but like someone like CNBC or another big financial media, you often won't see a lot of the U.S. exposure that we have because we own these positions through total return swaps. So a company like Green Thumb or CuraLeaf, these are the two largest operators in the U.S. And we own them via swap because, again, it's a federally illegal landscape. We're a U.S. 40 Act fund, which means that we can't be investing in federally illegal stuff. We got a legal opinion. We have the ability, though, to own these companies essentially on swap. So we do own them. But often what you'll see, you won't see that exposure in a lot of the description pages. Certainly you will if you go to the Amplify site and you look at our tear sheet and you look at the printout. But I want to explain that because a lot of people are like, well, it doesn't say you really own all these companies. In fact, depending on where you look, you might not see that. But no, the largest proportion of our balance sheet, really, Tilray, which is a Canadian LP with U.S. exposure, European exposure, and Canadian exposure, you can see that. But Green Thumb, CuraLeaf, TrueLeaf, Cresco Labs, these companies are core positions at the top of the balance sheet in the portfolio because they are the biggest companies in the U.S. And they are the companies that we think are winners here, even in a difficult environment. So I just want to make all that clear.